Up now, we have Catherine Murray, host of The Buck Stops Here, with our weekly crypto and digital asset update.
Hello, everyone, and welcome to your weekly crypto and digital asset update. I am Catherine Murray. Well, we have seen an interesting move in the markets. It's less about crypto and digital assets week in terms of the volatility and much more about the broader markets where we saw significant volatility with the major indices climbing 5.7% Monday and Tuesday, the best two-day stretch since April of 2020, 5.7% gains pretty much across the board. That does, however, follow some significant down weeks. Over the past 5 weeks, we've seen the markets close lower, and the month of September down by about 9% on average. It's important to kind of step back and say, well, why are we talking about this? And I'm saying it because there's been so much volatility within traditional asset classes and less so in crypto, which is really interesting because that was the whole idea behind crypto in terms of being an uncorrelated asset. Important to note, though, why this has occurred, the significant volatility and what triggered it. It really was triggered by the UK government's expansionary mini budget, which came out on the 23rd of September. At the time of already high inflation, they wanted to continue to kind of juice the market a little bit or juice the economy, which led to a broad market sell-off. People are concerned that they're going to just increase inflation. It had a contagion effect within the rate markets, and it forced the government to walk back those plans and also for the BOE, the Bank of England, to step in and support their currency. That is front and center versus cryptocurrency volatility. And interestingly, cryptos remained really within a 10% range over the past 2 weeks. Saw volatility pull back, specifically for Bitcoin as well as Ethereum, in large contrast to most other major markets. And therefore, I go back to the whole idea again that the correlation has declined quite significantly between crypto and other assets. And that was one of the key reasons why people wanted to invest in crypto, to diversify. Having said that, I do want to point out that the volumes are about, in terms of trading in those currencies, about 70% lower versus the 30-day average. So maybe investors are much more focused on the other side of their book, the more traditional assets. Away from that, from a news perspective, BlackRock has filed to list an ETF that's investing in companies with exposure to virtual platforms, social media, gaming, digital assets, as well as augmented reality. This, of course, follows their move into ETFs that are focused on blockchain as well as tech. So again, a continued move into the space by one of the biggest money managers in the world. Away from that, of course, we know that it's been a crypto winter. So you're seeing, you're continuing to see layoffs. At the same time, you're continuing to see companies that are able to raise funds. So on that point, I would just highlight, even though it's somewhat idiosyncratic and specific to this Indian crypto exchange, WazirX, they've laid off about 40% of their workforce, but that was driven by company-specific issues surrounding tax regulations and banking access. Apparently, the Indian authorities did investigate the company on alleged tax invasion. So that is something that might be company-specific, but nonetheless, you've seen layoffs at the Vision Fund, which we reported on last week, and also Meta. Fundraising, though, does continue to exist and show some nice strength. Crypto startup Juno has closed a Series A fund raise of about $18 million. And we have heard or reported that participation has been seen from executives over at Coinbase. But we also know that there's continued skepticism within the market surrounding Celsius, specifically bankrupt Celsius. That was the crypto lending platform. Apparently, the former CEO did withdraw about $10 million ahead of the company, freezing the withdrawals of deposits. A spokesperson for the company did say, though, that the CEO voluntarily disclosed those withdrawals. But nonetheless, the takeaway that you need to be thinking about and know about is that the actions by Celsius CEO might be used to justify a more involved regulatory approach. Away from that, I would also just point out that the Wall Street Journal has a report and an article citing that consumer complaints about crypto are on the rise. They've reviewed the increased complaints received by the Consumer Protection Agency since the sell-off or since the crypto winter began. So again, perhaps more regulation. And I think most market participants that want to see the industry evolve and continue to strengthen would be okay with really trying to figure out what the regulatory regime should look like. Lastly, you may have seen this. The SEC charged Kim Kardashian 1.26 million US dollars for touting on social media Ethereum Max without disclosing her compensation for the promotion. She was apparently paid $250,000 by the company. I'll leave it there. Back to you.
Thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here, airing Sundays at 9 a.m. Eastern only on the News Forum Network.